This chapter is the Introduction to Managerial Accounting. All right, so we're going to just go over the first two objectives. This chapter has four different objectives, but we're going to focus on the first two. For objective two, we're going to describe the nature of manufacturing operations. That also includes different types and classification of cost. All right, let's get into it. All right, objective two is going into your manufacturing operations. But before we jump into manufacturing operations, we have to back up just a little bit. The operations of a business. So if you have a business, do understand that the business must be classified as one of the three types of businesses. So you have three types of businesses. You have a service business, you have a retail business, or you have a manufacturing business. A service business is a business that provides a service and does not sell a product. Okay. So, an example of a service business would be a doctor's office, a beauty salon, not the retail part, but just the actual service part. So if it's a hair salon, they're doing hair. If it's a nail salon, they're doing nails. If it's a day spa, they're doing waxing, they're doing facials or massages. Those are all service businesses. And then you have a retail business. A retail business is a business that sells products that someone else made. Okay. An example of a retail business would be Apple. Apple's retail store sells Apple products. Okay. So, well, actually, Apple is a manufacturer. So, a better example would be Walmart. Okay. Because Walmart doesn't make these products, they just only sell products, right? So, Walmart is a retailer. So, when you say big box retailer, we're talking about companies that sell, like large companies that sell large quantities of products. Another example of a retail company would be like a department store. Again, your grocery store, a business that resells other products. And then you have your manufacturing company. A manufacturing company is a company that actually makes a product. So most managerial accounting concepts, they apply to manufacturing businesses. So most of all the rest of the lessons in this chapter, in this class, in this book, in this class, will be centered around manufacturing companies. Although the managerial accounting concepts mostly apply to managerial manufacturing companies, they can sometimes apply to service and retail businesses. And sometimes it may look a little different than the way it does for manufacturing, but the principle still applies. Okay. So, for an example for the rest of this chapter, we're going to use the example business Legend Guitars. All right, Legend Guitars is a guitar making operation. So it's a guitar manufacturer. All right, Legend Guitar, their operation looks like this. A customer places an order. It could be online. We'll just say it's an online order because we got this person here as it's a in-person order, but we're going to say it's an online order. They place an online order, and then Legend Guitars go and pull in their inventory raw materials of wood, nails, glue, and all of the things, string, all of the things that's needed to make a guitar. And then that raw material is taken to your different business units, business departments that helps to make a finished product. So in the example, you have your cutting department, And that is the department that's going to cut the wood and make it into the shape of the guitar. And you have your assembly department that's going to put the pieces together to create the actual guitar. And the actual guitar is a finished good, your finished product. Okay. That is a summary of Legend Guitar's operations. All right. So, why does this matter? How does this matter and fit into this chapter? So, again, we talked about objective 2 being, let's go and see what objective 2 was. Remember, let's be reminded. Objective 2 is to describe the nature of manufacturing operations, include the different types and classification of cost. Okay. So a big thing in managerial accounting is cost, because everything is decided and based off of cost. So, what is a cost? A cost is simply a sacrifice made to obtain some type of benefit. Okay. So, if there's no sacrifice and the benefit, it is not a cost. A cost is a sacrifice that gives a benefit. So, you have to have a sacrifice and a benefit to be a cost. And in managerial accounting, a cost has to have a cost objective. A cost object, sorry, has to have a cost object. And a cost object is anything that the cost can be assigned to. And that would vary based on your management needs, okay? There's no set cost object. But whatever management say the cost object is, that is the cost object that you have to have every cost be assigned to, okay? And every cost is going to either be a direct cost or an indirect cost. A direct cost is a cost that can be directly traced to that cost object, and an indirect cost, it has to be identified, but it doesn't have to be directly traced to the cost object. Okay, so what's an example? Material, nails, and string used to make a guitar is a direct cost to making this guitar. Your production supervisor is an indirect cost to making this guitar. You do need this production supervisor to be more efficient, but you don't need the supervisor to make that actual guitar. Okay? Now, remember, direct cost is traceable, indirect cost is intraceable. So we have a cost, and there are 3 types of cost that can be direct or indirect. Okay. Your 3 types of costs are direct material, direct labor, manufacturing overhead. Okay. Now, direct material is material that begins raw, or just simple, just individual material bought that can be used to make a finished product. Okay. So direct materials they begin as raw material and will eventually turn into finished material. Okay. And direct materials are, guess what? A direct cost, because it is an integral part of the finished product. Okay. And it's also a significant portion of the total cost of the product. So some examples of direct material costs include the cost of wood used in producing a guitar, the cost of electronic components for a television if you're making a television, the silicone wafers for a microchip, the tires for an automobile. These are all considered direct material costs. And direct material costs are, guess what? A direct cost. Direct labor costs. Remember, it's three: direct material, direct labor, manufacturing overhead. So direct labor is where most manufacturing processes use employees to convert material into finished products. So these are the people that are actually working with that material to produce your actual finished goods, okay? So the cost of employee wages is the integral part of the finished product, and it is classified as direct labor cost. Direct labor cost is a direct cost. Okay. But for it to be a direct labor cost, it must meet these criteria. It must be an integral part of the finished product, meaning it can be traced back to the cost object, and a significant portion of the total cost of the product. Okay. So direct material and direct labor are your direct costs. Examples of direct labor costs would be your wages of employees who cut guitars out of raw lumber and assembles them. Another example of direct labor is mechanics' wages for repairing an automobile. And another example would be assemblers' wages for assembling a laptop computer. Okay, these are examples of direct labor costs. So we have direct material, direct labor that are direct costs. So then, if these are all direct costs, then do you think manufacturing overhead is direct or indirect? If you said direct, you are incorrect. Okay. Manufacturing overhead costs are indirect costs. Okay. Manufacturing overhead sometimes is called factory overhead or factory burden. And these are costs other than direct materials and direct labor. So if you see a cost, you want to first see if it's direct material or direct labor. If it's not direct material or direct labor, it is automatically thrown into manufacturing overhead cost. Okay? These combined costs are your indirect costs to the product. An example would be heating and lighting the factory. Now, you may say, okay, these are utilities. They are directly needed to make that guitar or make um, whatever product we're making. True, you do need these utilities, and it is important to have these when you're making your product. However, this heating and lighting can also be traced to other things, can be used for other things in that building or plant, right? So its utilities are not exclusive to making that guitar. So it's not a direct traceable cost. So that is why utilities are not direct cost. Okay. Repairing and maintaining factory equipment. You may think that repairs and maintenance to your factory equipment will be a direct cost, and it may be a direct cost. However, it's not direct materials or direct labor. Okay. The definition of manufacturing overhead is any cost other than direct material and direct labor are manufacturing overhead costs. Okay. Property taxes on factory buildings and land. Taxes will always be overhead costs, which are indirect costs. Insurance will always be indirect costs. Utilities will always be indirect costs. Repair and maintenance will be indirect costs. Depreciation, insurance, these will all be indirect costs at all times. Okay. So basically, if it's not direct material or direct labor, it is automatically indirect cost. So let's do a little knowledge check. For a manufacturer, which of the following would be considered a manufacturing overhead cost? A, hourly wages paid to assembly workers. B, cost of flour in a cookie factory. C, electricity costs in a furniture manufacturing facility. Or D, hairstylist wages at a mall hair salon. Which one do you think would be an manufacturing overhead cost or indirect cost? All right, let's go through each one and identify if it's direct material, direct labor, factory overhead. All right, wages, hourly wages paid to assembly workers. This keyword wages lets me know it's probably direct labor. Cost of flour in a cookie factory. Well, cookies require flour, so it is a direct material. Hairstylist wages at a mall hair salon. A hair salon that does hair needs hairstylists, so the hairstylist wages will be direct labor. Okay, you see, this one was they threw in a service business here, right? All right, so that leaves the only answer to be C, electricity cost in a furniture manufacturing facility. But let's check our work here, right? All right, so we say it's C that it's a manufacturing overhead. The rule says if it's not direct labor or direct material, it's automatically manufacturing overhead. So electricity is a utility. So is that direct labor? No. All right, so we halfway there. Electricity, which is a utility, is not a raw material. Direct material has to be a raw material that can be converted to a finished good. You can't convert your electricity costs into a finished good, so it can't be direct material. So, by definition, your electricity or your utilities cannot be anything other than manufacturing overhead costs, which is an indirect cost. So if you said C, you are correct. All right, so recapping, a cost is a sacrifice that produces a benefit that is tied to a cost object that is either direct or indirect. Okay, and deciding if it's direct or indirect, you're going to label it as direct material, direct labor, or manufacturing overhead. Direct material and direct labor are both direct costs because it can be directly traced to that cost object. Manufacturing overhead is your indirect cost that can be indirectly traced to your cost object. All right, you guys, we have gone over objectives 1 and 2 for chapter 15, and I cannot wait to see you all in the next class.